Alright, let's talk about building a real scalping strategy from the ground up. And I mean the whole thing. We're not just going to look at some random entries and exits. We're going to build a complete framework, starting with the one thing that trips up, I swear, almost every single trader out there. So, first up, we're going to expose the real enemy in trading, and surprise, it's probably not what you think. Then, I'll show you how to actually read the story the market is telling you, and how to follow the smart money. From there, we'll dive into two super concrete, rule-based strategies, the false breakout and the scalping box. And finally, we'll tie it all together so you have a clear path to consistency. You know, most traders think they fail because of a bad strategy or some lagging indicator. But the truth, the real war isn't happening on your chart. It's happening right between your ears. So that brings us to the big question. What is it? Well, it's not a lack of information or knowledge. It's trading with a position size that's just way too big for your own psychological comfort zone. See, when the risk gets too high, your logical brain shuts off and your survival brain takes over. And what's wild is that your brain literally cannot tell the difference between being chased by a tiger and the threat of losing a bunch of money on a trade. It's the same panic response. As the great trading coach Mark Douglas said, once that fear kicks in, you're not trading your plan anymore. You're just fighting to survive. And all logic, all strategy just goes right out the window. And this slide just lays it out perfectly. On one side, you have the losing trader just bouncing between fear, hope, and greed, emotionally reacting to every single tick on the chart. But the winning trader, they operate from a place of neutrality, discipline, and patience. They aren't fearless. No. They've just set up their trading in a way that fear is no longer in the driver's seat. And that fear, it leads directly to all these classic account-blowing mistakes. You know what I'm talking about. Hesitating on a perfect setup, nudging your stop loss down because you just can't take the hit, or cutting a beautiful winner way too early just to grab a tiny profit. Every one of these is a symptom of the same disease. You're risking too much money. Okay, so once you get your mind right, the very next step is to learn how to speak the language of the market. And guess what? That language is written in candlesticks. Now let me save you a ton of time. You do not need to go memorize dozens of ridiculous pattern names like 3 black crows or abandoned baby. Seriously, that is a complete waste of your brain power. Every single candle is just telling you a story about the fight between buyers and sellers. The biggest shift you can make is to stop memorizing and start interpreting. So instead of asking, hey, what's that pattern called? You should be asking, what is this candle telling me about who is in control of the market right now? And honestly, it's this simple. A big fat candle body, that's strong momentum. A tiny little body, that's indecision. A long wick sticking out the top, that means sellers smack down higher prices. And a long wick on the bottom, buyers stepped in and rejected lower prices. That's it. That is the entire foundation you need for reading price action. Alright, so now that we can read the story of the individual candles, we need a tool to see the bigger picture. We need to know where the big players, the institutional money, are actually putting their cash to work. So most traders are taught to use a simple moving average, but here's the fatal flaw. A moving average treats a candle with, say, $10 million of volume the exact same as a candle with just $1,000. It makes no sense. VWAP, on the other hand, is a total game changer. It averages the price, but it weights it by volume. So why is this so crucial? VWAP tells you the average price where the most money has actually traded hands. Big institutions use this as a reference point all day long. So for us little guys, it basically acts like a magnet for price. If we're trading above the VWAP, buyers have control. If we're below it, sellers are in control. Simple as that. And using it is incredibly straightforward. It's a simple 3-step dance. First, you just identify the overall trend. Are we going up or down? Second, you wait patiently for price to pull back to the VWAP, which acts as our moving area of value. And third, you use those candlestick reading skills we just talked about to spot a clear signal that the trend is about to continue. And especially, if you want to master the market with a practical, hands-on approach, no fluff, no pure theory, make sure to click subscribe and turn on the notification bell. It's the best way to ensure you don't miss the battle-tested strategies I share every week, helping you transform trading from a game of chance into a professional business with a real process. In the next video, we're moving beyond theory. We're going to break down the most practical, actionable content that you can apply to your charts immediately.